because of a hectic short covering rally across emerging markets, and India was not far behind. Jonathan Schiessl of Ashburton, who manages the Ashburton India Equity Opportunity Fund, which is a $70 million fund, joins us now to give us his view on both India, China and everything that's transpired so far. Jonathan, good afternoon and thank you for speaking with us. It's been hectic times for emerging markets in the last couple of weeks, but do you think the worst is over, or do you fear some more downside?
I think I'd agree with you about the hectic times. It's been hectic times for a little bit longer than a couple of weeks. I think, obviously, as you highlight, this is probably quite a pretty profound short covering rally, particularly in some of those oversold metal stocks. I think we're still in a period of heavy volatility, both to the upside and the downside. I don't think we're through that yet, but obviously I think markets were looking quite oversold, so they were quite susceptible to a pretty profound rally to the upside.
Okay, Jonathan, hi. You also run an India-China fund, and you know that the last data that we have, the India weight was 48%. Now, both India and China have been extremely volatile over the last 2 or 3 months. What's your relative position now between India and China?
We topped up. We've been quite aggressive with that. We had gone to sort of quite as underweight as we were, as possible as we could get to a few months back within China. About, I guess, 3 or 4 weeks ago, we started topping up very gradually some of our Chinese positions. The fact, however, remains there's still a lot of uncertainty within the China universe. There's certainly been, to our mind, policy errors from regulators and the government in how they've handled both the stock market and, to be quite frank, the recent so-called currency devaluation. So I think there's still a lot of uncertainty within the China space. It had started to look extremely cheap, which is why we started to dip our toes back in. That said, we're still very underweight, very comfortable with having more in India versus China here.
Okay, so comfortable of having more in India versus China. But specifically on India, are you topping up on your positions now, since the market is, off 15% from its lifetime high?
Well, actually, if I'm honest, we've been topping up into this sell-off all the way down. We've been sitting on quite elevated levels of cash for the last month or so. We've still got relatively high cash positions for us, but we have over the last, I'd say, particularly over the last week or so, been redeploying some of that cash into some very oversold names. But we don't think that the volatile period is over. To our mind, it's just as unhealthy that markets rise like this on the upside as it is to the downside. It provides some relief, obviously, but it is, it doesn't escape from the intense volatility that we're experiencing.
Indeed. Jonathan, of course, your highest overweight is in financials, and we've seen financials actually go through a real turmoil. Do you think this is actually an opportunity to lighten up some positions in financials, the kind of rally that we are seeing right now, or are you not concerned with the overall correction in the financial space in the first place?
Yeah, I'd agree with that. So we have actually, yesterday, we're topping up some financials names, so it's still a very large overweight for us. Obviously, it's the pull and push factors. On the one side, obviously, financials are, geared into a broader economic recovery, which, obviously is still patchy at the moment. It's not much evidence of this broad economic recovery. And so there's still concerns there about the NPLs, about all the issues facing financials, and obviously, we're hoping to see some sort of interest rate cut towards the end of the month. So I think there's pull and push factors in that sector, but certainly a lot of the counters have been very aggressively oversold. So from a valuation perspective, we were quite happy to add to some more names.
Oh yes, and one of those aggressively oversold counters is Tata Motors, a stock which features in your India Equity Opportunity Fund. That one's fallen 30% this year. Would you add more to that name, or is there a genuine concern in that business?
I think we're really comfortable with the underlying fundamentals. We're really comfortable with the product rollout. And indeed, from what we hear about their actual sales within China, which is the source of this instability from a stock market perspective, things seem to be getting a lot better. So, I think people have been using that name as one of the few counters in India that obviously is quite exposed to China. So it has seen the brunt of the selling because of that. So I think that the counter will be remain volatile for some period longer. But to our mind, the underlying business is still firing on all cylinders. We're very comfortable with that. But obviously there is that volatility. I mean, so we are heavily overweight Tata Motors, and we were adding to that last week.
Okay, what kind of cash levels do you have right now in your India fund? And I mean, would you have deployed most of that over the last 2 weeks or so when we've seen the kind of fall, or do you still have some cash levels that you would want to deploy over the next 1 month or so?
Well, I think, we're sitting currently on about 5% cash, which is quite high for us. We have been higher than that. But, our overall message would be, we still think that we haven't come through this volatile period quite yet. So patience is the word that we try and focus on. We've got a few names or existing positions that have done very well, that have come back. So we're looking to add to those. So we're just being patient. You'll get these days, or you'll get these periods where the markets roar either way. So we don't feel quite compelled to redeploy all of our cash just yet. But so we're just going to watch and wait for a bit longer.
Okay, so will Infosys be one stock where you'll be comfortable adding more? That's been one of the outperforming stocks.
Yeah, absolutely. It's our largest, continues to be our largest position. We own it not because it's in a benchmark, because we actually like the underlying stock. Obviously, the moves in the rupee over the last month or so certainly will have helped the entire sector. And the feedback we're getting from management also seems to be quite encouraging as well. So we're very happy with the Infosys position we have.
But will you be adding more into that?
Yes, actually, and it's another one that we have been adding into over the last couple of weeks.
All right, so you mentioned that you've been adding into Tata Motors and into Infosys over the last couple of weeks. What about a stock like Axis Bank? Because, that stock has fallen about, 10 to 12% this year in tandem with a lot of other private sector banks. Is this a good time, or do you think that you could get better levels in the private sector banking space, say, in the next 3 to 4 months?
Yeah, so it's a difficult one because we were already very heavily skewed towards the private sector banks. So we haven't actually upped our position within Axis. We've upped our position within ICICI Bank instead for the moment. That stock has fell even, I think, more brutally than Axis. Axis, however, does remain one of our favoured holdings. I think the performance metrics, just speak for themselves. And I think the environment that we're in, yes, everybody's looking for more action from the government on sorting out the PSU, public sector banks. But to our mind, I think the private sector banks like Axis, ICICI, HDFC Bank as well, their sort of inexorable gaining of market share, that is going to probably intensify and gain going forward, particularly with e-commerce in the banking space as well. So we're happy to have our banking positions towards the private sector as opposed to the public sector names.
Jonathan, one stock that's given multiple fold returns to you has been Eicher Motors. Of late, of course, there's been some correction. Is there temptation to add more to book profit because you have been a long-time investor in Eicher Motors? What's your call on a name like this?
Yeah, we've been thankfully in that name for, I think, over 5 years. It's obviously been a phenomenal performer. I think it's becoming more widely known amongst the FII community. We've seen some of the bigger brokers launching coverage on the counter over the last few months as well. So it is becoming more widely known. I think from a valuation perspective, some of the Royal Enfield story certainly you could argue is within the price in the short term. So we haven't actually added to the name more recently. But that said, we're very comfortable still with the outlook for both the two-wheeler business and actually the recovery in the commercial vehicle business as well.
Okay. It is very heartening for an Indian investor to hear from, big houses like Ashburton that they are deploying money in this fall. So I just wanted to get your overall view on the global situation and how India would pan out, because less than a week ago, people were talking about the possibility of a bear market globally induced by what's happening in China. Do you think all of those fears are overstated?
We felt that the fears were overstated at the time. I think if you compare the sell-off that we've just been through or are currently going through with what happened in 2008, I think obviously 2008, when you tend to see really big bear markets is usually when there's an issue around the financial system. I think to our mind there isn't particularly, there isn't some systemic crisis surrounding the global banking sector as it stands today. And I think this sell-off is more to two main factors. I think it's global growth concerns, be it issues in China, U.S. interest rates rising, etc. On the one hand, that's been worrying investors. And secondly, obviously, we're 5 or 6 years into an equity bull market, and there certainly were some warning signals from a technical basis. The market was getting a bit over it. It's just a bit tired, shall we say? So I think those two factors were important. And that's it. But our overall view is we still like equities as an asset class here. Emerging markets obviously has been a big underperforming asset class for a number of years. Obviously India has outperformed other emerging markets, and to our mind still will do. Mm-hmm. But the emerging space probably still is a troubled space, generally speaking. And obviously I think a lot of investors will continue to be underweight broader emerging markets and still focus their equity investments on the US, Europe and Japan.
Okay. Jonathan, what's your call on the pharmaceutical sector in India? Because you are underweight as a sector on healthcare, but you do have Sun Pharma as one of your top holdings. So, of course, it's a stock-specific story here, but in general, do you have a call on the Indian healthcare stocks?
Yeah, obviously the sector, it is interesting when you look at the healthcare sector, both in India and globally, it's been a phenomenal sector. Pretty much in every market you look at, the leading sector is healthcare on most time frames as well. The issue to our mind in India, why we haven't gone more aggressive and either gone to a neutral or even an overweight position is valuation. It is a good sector. We like the look of it, but it's slightly expensive to our mind. We're happy to hold some exposure to it because we think there are some very good companies within that sector, which I guess is quite different because we have nothing in the staples sector, which is predominantly down to valuation. So, we do have some exposure in pharmaceuticals, but it is a little bit pricey.
Okay, so just to get some more views out of you, you mentioned that the 3 stocks that you've added weight into recently are Infosys, Tata Motors and ICICI Bank. Any more stocks either from the frontliners or the broader markets that look attractive and where you have added into positions recently?
Yeah, we've had, which is quite encouraging, I guess, is we've had quite some good inflows into some of our funds that we're running. So that's enabled us to increase our cash ratings and deploy that sort of judiciously when we view an opportune time. So we haven't necessarily tried to get too picky. I mean, obviously the ones you mentioned, we specifically have added to, but we have added to a few other ones just to get them, some of that cash that's been invested into our funds into the market as such. So it's quite broad spread across various other names. That said, we've also taken part in an IPO which was listed today, which is Nascar, that actually came to the market today, which last time I looked was trading at a reasonable premium to its listing price.
Oh yes, that has had a decent listing today, the Nascar IPO. We should just pull that up. So you have invested into this IPO. What is your view on the logistics space? Because it has peers like All Cargo and Concor which have done quite well. What kind of a growth do you see for Nascar particularly?
Well, I think what attracted us, we were one of the anchor investors in that particular IPO. We don't generally take part in IPOs, so what attracted to us about this particular name is, firstly, we are believers in the economic recovery in India. And secondly, the logistics space is one that we think is still, from a structural perspective, one that will grow fairly rapidly over the next few years and indeed decades. So I think it's an area which has structural growth, which is what we always try to look out for. And then you align that with the unique land bank that this particular company has, and we think the company looks fairly well placed to sort of benefit from India's potential growth in the years ahead.
That's interesting because you've dropped the Gateway District Parks out of your top holdings. What led you to do that, and was that a bit of a valuation call? We have seen quite a bit of gains in some of these stocks as well.
Yeah, you're right there. So we still own Gateway. We took a little bit of the top off, if you like, in that particular counter after it was really moving extremely rapidly up. I think on hopes of an IPO of their railway business. So we still hold the stock. I guess infrastructure is an area which we like, structurally speaking. It's an area which we were happy to add another name to. But so we still own Gateway, but we just pulled back the unit size into that previous rise that the stock had seen. And actually, we have added a little bit back into that name more recently.
Any other IPO that you are keen on right now, since you spoke about Navkar?
Yeah, as I said, we don't tend to get too involved in the IPO game. We like to understand a company thoroughly before we invest in it and then hold it for a number of years. So the IPO, sort of flipping and stuff is not what we're about. But we're currently not reviewing any other IPOs as it stands.
Okay, that's a lot of good advice that you've given us. Jonathan, thank you so much for your time, and thank you for speaking with us on CNBC TV 18. That's the word coming in from Ashburton. They believe that the fears of a global meltdown were overstated, and they have in fact been buying in the recent past. They manage big funds, the India Equity Opportunity Fund and the Chindia Equity Fund as well, and they've been buying Infosys, Tata Motors, ICICI, and guess what? Navkar.
Navkar, yes, and Gateway District Park still remains one of their holdings. It's not part of the top holdings, but that still is part of their holdings. But yes, it was fascinating to hear his thoughts, Sonia, on so many individual stocks. Ashburton Motors, I think he's been invested since sub 1,000, if I'm right. So for him, it doesn't make too much of a difference whether it's fallen from 21,000 to 17,000. Yes. For late entrants, of course, it makes a difference, and in fact, maybe gives an opportunity to add more. If you have cash levels. And
as he said, it's always valuable to pay for growth, because despite having higher PEs for some of these companies, growth will still give you value at the end of the day.
Yeah, and one more point that really stands out is on healthcare sector, because we've been talking about healthcare sector here. It's been a bit of a global phenomenon, the kind of rally that we have seen, and even the decline that we're seeing right now is a bit of a global factor in the pharma space. So that's really been the other interesting bit. But yeah, I mean, truly fascinating conversation that we had with Ashburton, and you saw some of those flashes turning on your screen as well. Infosys was his top hold.